meeting for May 1 of Audit and Finance. Would you like to go ahead and call the roll, Becky?
Sure. Councilmembers Perkins? He's here, but not in the physical.
Okay, well, go ahead and keep with your roll. Maybe he'll hear us.
Councilmember Roberson?
Here.
Councilmember DeLucy?
I'm here. And can we have everyone else identify themselves who are in on this meeting, please?
Yeah, I can go ahead and just give you a rundown of who's joined. So we have the committee, we have Adam Norris, Brian Kidney, Chester Moyer, Mark Tillman Perry, Nancy Cooper, and Zach Walker.
And I believe you can go ahead and call Mr. Perkins to order now, Becky.
Sure can. Councilmember Perkins?
Are you here? You have to unmute.
Here.
Thank you, Mr. Perkins. The meeting is in fact called to order for a continued review and discussion of fiscal year 2018-19 comprehensive annual financial report. Before we get into it, I had thought we were done with poor Mr. Moyer from the auditor's report. I didn't expect to see him. Since I do see him, I only have one question for him. And so, Mr. Moyer, my question is, in your report, your single audit report, there's a number of blanks where there's going to be dates inserted. When are you going to be inserting those dates, and do you know what those dates are?
Yes, thank you. Good to see you again. Those dates will be the completion dates of the entire audit. So when this draft stamp is removed, that's the effective date when the last of our audit evidence is received. The last piece of audit evidence that we receive is the management representation letter. So that would be our last step, and we expect that to be late next week.
So still in the month of May?
Correct. That's correct.
Okay. Okay. And once you finalize that, you send it to the city manager who will then disseminate it again, or is there another step in between those?
As an auditor, I leave that to the discretion of each local government that we work with. So the process, I'd leave that to maybe Mr. Kidney could answer that, or someone else about how that process would work.
But you'll be done when you've put that final draft in and you take out the for discussion only purposes from what we have. Is that right?
That's correct. Yes.
Okay. I don't have any other questions for Mr. Moyer. I don't know if anyone else does. I hate to have him sit for 2 hours in a meeting unless he needs to. Dr. Roberson, do you have any questions for him right now?
Questions. Thank you for being here, though.
Mr. Perkins, what about you?
I do not.
And I personally do not. I mean, Mr. City Manager, is it okay with you if we let poor Mr. Moyer go on with his day? He already spent 3.5 hours with us. I don't know that he wants to spend more time.
No, that's quite all right with us.
Mr. Moyer, again, on behalf of the city and the Audit and Finance Committee, thank you very much. We really appreciate your assistance. Have a good day.
Great. Thank you.
Okay, so now we're going to go ahead and get to item 3, the continued review and discussion of fiscal year 2018-19 comprehensive annual financial report. And Dr. Roberson and I were talking earlier than today. We both, I know I had a chance to review it a little bit more, and I know he has had a chance to review it a little bit more. Mr. Kidney, God bless you. You had like 15 minutes to present the entire 200-page document to us. So I don't know if it would be best to ask you to maybe expand on your 15 minutes, or if committee members with particular questions should ask their questions. I'm open to any suggestions, gentlemen. Well, then I suggest, go ahead.
No, I guess I'm sorry. I should have waited just another second, and I'd be more than happy to do a similar review that I did last time. Again, recognizing the probably the little rushed feeling that the committee had due to only getting it the week before, not being able to digest any numbers. So I would certainly understand if some of the things I said just didn't stick because of that reason.
And not to pick a fight, but we got it the night before, Mr. Kidney. We didn't get it the week before. We got it the night before our meeting. Okay.
Yeah,
And I know I have
I missed.
questions. I personally don't care to have you repeat everything you already said. I listened to it once. Dr. Roberson, you want to ask your questions? You want me to start? What would you like?
Doesn't matter.
Okay, then I'll start at page 10. I just didn't understand a sentence. And it is in the management's discussion and analysis, right above the overview of financial statements. It talks about the total charges for the services for the city decreased 1.2 million, with the business type activities decreasing 1.6 million, and the governmental funds increasing by $375,922. The decrease of the business type activities is due to less favorable weather conditions for the utilities. I understand the last sentence, but not the first sentence. The charges for the services for the city decreased 1.2 million. What does that mean in plain English? Total charges for services for the city. Is that just utilities?
Sure. So this document is talking about the city as whole overall, but
Right.
yes, the lion's share of it would be the utilities.
Okay, so that would be both businesses, it's all utilities, right? Water, utilities, sewer.
Yes.
Okay, so what are governmental funds? What increased 375,000?
So governmental funds are basically, if you think of it, it's the non-utility funds. So everything that's not a non-utility for us, with a few exceptions, are referred to as governmental funds. These are tax-supported funds mostly.
Sales taxes, property taxes,
Correct.
circuit court, I'm sorry, not circuit court, but municipal court fees, permit fees,
Correct.
everything except utilities is governmental funds.
Correct.
Is that what you're saying? Okay, so we had a
Yes.
decrease in the charges. We had a decrease from our 9.08 per pilot from the utilities. That's what the 1.2 million is?
Correct. And again, that would be due to changes in weather that might have impacted the utility revenue that would then therefore impact the pilot revenue into the general fund.
Does this decrease, was it in any way affected by our 6% decrease in IPL rates?
Yes. Yes.
Okay.
Actually, no, let me take a step back. I have to just remember the timing of this. This is for the period of July 1 of 2018 through June 30th, 2019. So
When did we had two rate?
Yeah, I'm just offhand. I'm just trying to remember when those rate increases would have hit the actual budget.
So, okay. Well, let's assume we made a rate decrease, in May. It would have had an effective date. So all we have to do is look on the effective date. And if it's within the confines of your date you just gave us, they would have in fact affected this decrease, is what you're saying. Okay, all right.
Yes.
Got it. And then I was looking at page 14. And it's talking about the financial analysis of the city as a whole. And it talks about long-term obligations. And then I went to page 22 to try and understand what long-term obligations were. This is not an easy document to understand. So what are long-term obligations?
Aaron, if I could,
Oh.
Yeah, please.
too. So the long-term obligations, and I referred back to page 10 because
Page 10, okay.
it seems that the long-term obligations have decreased by almost 100 million. And I assume that is the big savings that we obtained with OPEB as a result of the retirees' healthcare. Is that correct?
Yes, long-term obligations. When we're speaking of long-term obligations, that is exactly as what it sounds like. These are things that the city owes as of right now, or will owe over a course of some period. I could refer you to a chart that breaks those long-term liabilities down.
Do these include our TIFs?
Yes, if there's any outstanding TIFs, that would be, yeah, everything the city owes is a long-term obligation.
And last Friday, we talked about the difference between a pay-as-you-go TIF and a city-backed TIF. This $323,995,565 long-term obligation I'm looking at on page 14, does that include all TIFs? Or does it just include the city-backed TIFs? I just don't know.
Okay, so I'm trying to catch up with you. When you say page 14
Of your management discussion and analysis, your report, the 190-page report.
There's a chart in the top half and then a couple paragraphs below it.
Okay,
Yeah,
so it starts the city's combined net position.
Brian, I'm sorry, it's page 14 of your report. At the top of my page says financial analysis of the city as a whole. I'm sorry, you're not muted, but we can't hear you. Becky, can you hear him?
No, I can't hear him, but it's not showing as muted on our end.
He's lip
Brian,
syncing.
yeah, Brian, could you maybe mute yourself and then unmute yourself? Maybe there's a glitch in your.
No, we're still not able to hear you, Brian.
Okay, now try.
I'm sorry.
All right. Okay, good. I want to understand this report, and it's really hard for me. I'm not an accountant. And so when I run across a word, I'm never embarrassed to say I don't understand what the word means and I don't understand the term. And so I'm just trying to understand where we are talking about such a large number, 323 million. Does that include, even pay-as-you-go TIFs, which to me are not city-backed? So I would not consider that a liability, even though an accountant might. I'm just trying to understand this report.
No, you're exactly right. It would not include pay-as-you-go loans. If you'd like, again, I do have a chart that will show what our long-term liabilities are.
At this point, I think if you gave me another piece of paper, I'd hang myself. There's so much paper here, Brian, and I just want to try and understand this. And if we need to get more paper, okay. But for right now, let's just try and clip through this if we can.
Madam Chairwoman?
Yes, sir, please.
As we're talking about the long-term debt, I think it was touched on last week when we were discussing that whatever possibilities taking advantage of these low interest rates, that if there's anything out there that we can refinance as a city to drop our interest rates lower to hit, so we can reduce whatever that long-term obligation is and drop that interest rate. Is that something that we're aggressively looking at, Mr. Kidney?
Correct. That is something that I review with our financial advisors at least every other month. In the current environment, we're talking about this almost weekly. I mentioned earlier the Cracker Neck Creek debt transactions are actively being looked at. as well as one of our electric bonds outstanding. Looks like it's available for also refunding. So we're also doing the analysis on that one also.
Okay, and this is a report ending June 30, 2019. So this large number of 323 million wouldn't have the pay-as-you-go TIFs in it, and it might have the city back TIFs, is what you're saying.
That is what I'm saying.
Okay, thank you.
I do have a question about the outstanding obligations by the city. On page 14, it talks about, let's see, in the third sentence, it says long-term obligations for government activities decreased 99.6 million. So that was long-term obligations, which could be interpreted as bond payments, but it also, I think, has to do with OPEB and the unfunded liability for healthcare that we saved a significant amount on by going and doing away with the type of health insurance for retirees. The health insurance for retirees, if I remember right, saved us around $80 or $90 million over the long term of our unfunded liabilities. On page 21, it says the current end of the fiscal year 19 had a total of 502 million of outstanding obligations, which I'm assuming is primarily debt, bond payments and principal. So it's interest and principal on bond payments. Is that right? On page 21?
Again, I'm going to go, and I'm not going to show this piece of paper to you. I wouldn't want anything to happen. But I will read you some of the changes that happened.
When did they happen?
Remember, we have two types of funds. We have governmental, which is everything but utility, and then we have utility funds, right? So the drop in the governmental type of liabilities, so our long-term liabilities for governmental funds went from 387 million down to 318 million. The reductions, and Councilmember Roberson was correct, the lion's share of that was $73 million lowering because of the health insurance change for retirees. So the lion's share of 73 million of that $86 million decrease was due to the health insurance change. We also paid down $6.7 million in TIF loans and about $1 million differences in our compensated absences. But that's the primary decreases for our governmental liability, which is made up of our TIF loans and our OPEB liability, if you will. Those are our two big liability items for government, for the governmental side, for the non-utility. That's what we owe. For the business type operations, which is your utilities, the primary reduction was also the OPEB liability. So hopefully, did that clear up? You're asking about two different types of liabilities. The long-term liability for utility type is 465 million. The long-term liability for governmental is 318 million.
Okay.
Page 15. I was taking a look at the change in net position. And I saw that administrative services went up almost $2 million. And I wondered why. If
I'm wondering if some of that was the change in how we actually report administration beyond or other than non. I'm drawing a blank real quick.
okay,
Can I jump in real quick?
So, but if you will, we have both Cindy and Nancy on the phone. Nancy, can you answer that
Yes.
quickly?
Yes. So for the 2018-19 year, we used to have, prior to July 1st of 2018, I should say, we used to have a non-departmental general fund cost center that we would use for a lot of things like phones and retiree health insurance, things like that, where we weren't really allocating it necessarily to a specific department, but it was just a non-departmental for the general fund as a whole. And so at the beginning, July 1st, 2018, we did away with that non-departmental, and we allocated all those budget and those expense items out to specific departments.
okay. And so the money hasn't changed there. The name of the money has changed, but the money hasn't changed.
Right. Like if you look at the general government row, it was like 1 million, and previous years it was 9.7 million. So those expenses, instead of being in the general government, which is where we had the non-departmental kind of allocation, it's been allocated to the different departments up above.
Okay, I'm trying to find 9 million. 9 million in what year? Where am I looking? Oh, I see it.
On page
Down for 18.
Yeah, page 15. Yeah. So the general government went way down, but then the other departments went up because we reallocated those expenses to the specific departments
Okay.
instead of being a non-departmental kind of general category.
And Nancy, while I have you on the line, what are transfers in and out? What does that mean?
Transfers in and out, there's going to be kind of, well, right here on this page, the transfers in and out of the 20 million are the pilots. And so you'll see that it's a positive 20.3 million for the governmental column, and then a negative 20 million for the business type. So those are the pilots payments that the utilities are making to the governmental or general fund.
Okay, so that's just accounting. Okay. And then I could not find the paragraph right underneath that chart, Nancy. The sentence starts with total revenues increased 7%. And it ends, that sentence ends with sales tax revenue 9%, or 494,223. And for the life of me, I can't find where that number is on this chart.
Okay.
I couldn't understand
To
it.
tie to the 494,000, if you look at the top under sales tax, the sales
On the
tax
same
row,
page, right?
and then on the same page above, and then all the way over to the total columns. And if you take the 51.799 million, it's the difference between that number and the 52.2.
Okay. Okay. Thank you. That's where it is. Oh.
Madam Chair,
Oh, yes, sir. Help me, John, help me.
well, I'm quick glance. Nancy, is that the typical trend with about $500,000 a year is what we've been losing in our sales tax?
Yeah, the sales tax has been very stagnant. Brian, I don't know if you want to kind of, expand on that. We haven't really had a whole lot of increase in sales tax revenues over the years.
Have we had this $500,000 decrease that John was talking about?
In the previous year? Is that what you're referring to as in the previous year decrease, or?
I thought John was talking about.
Is that what we've been averaging? Yeah.
Yeah, let me go back and look at last year's real fast.
Council, if I might,
Yes.
if you turn to, it's a long ways back, but if you turn to page 142,
Oh, sweet mother of God. Okay.
you do get a 10-year history of our city sales revenue.
Okay. 142. So all these
Correct.
numbers are sales taxes that went into the various funds?
Correct.
Okay. Well, I see them increasing, not decreasing. Oh, they did decrease
If you will,
from 18 to 19.
Yeah.
Yeah.
yeah, this report reads from left to right, older to more recent.
Right.
It sometimes gets confusing because the other reports will have the more recent, closer column.
Right. Right. Okay. But it's not been decreasing the 500,000. It's not been increasing. And I know our costs have increased.
Correct. It according to this schedule, this is the first year that you've actually seen a decrease for all funds combined.
Right. Okay.
Yeah.
Well, that answers that for me. Thanks.
And I want to go right ahead.
So on page 22, it has a figure for non-current assets depreciable of 254,879. Can you tell me what that is?
Where
Yes.
is it on the page?
Page 22, Exhibit 1, it says at the top, it's a bunch of figures and table, and it's under the second major heading, which is non-current assets.
Okay. Okay.
It's capital assets, semicolon, and it has non-depreciable and depreciable.
Okay.
net.
Got it.
And I'm wondering, what is the depreciable assets of that magnitude that are non-current?
So, first of all, non-depreciable means that simply enough, it doesn't depreciate in value, and that's typically land. So, what you're seeing in the non-depreciable row there is the value of the land of $121 million for all the city land locations. The depreciable is then, that would be our building and improvements and infrastructure. So that is net of the depreciation. So the governmental type is 254 million net of depreciation expense, and the business type, which is our utilities, is close to $496 million. I also have a chart available if you'd like me to read those off on the details for that.
No, that's
I
fine.
just want you to repeat what you just said in English for me. The land I got. The land I got.
Okay.
It's 121,555,000. Got that.
Right. We also have buildings, major equipment, and infrastructure such as roads and bridges.
Okay. And
Those
that's
all together. Sorry?
That's citywide. That's not just in this department or that department. This is the city as a whole.
Absolutely.
There's
Okay,
two,
gotcha.
one for governmental, one for business type.
So I should ignore that and just look at the total. Is that what you're saying? Okay. Okay. So depreciable net. And the $750,860,067 is the buildings, the infrastructure, the equipment. And that would include snow plows and police cars and fire trucks.
Yes.
Okay.
that is supposed to represent, if we were to sell everything the city owns, we'd be able to sell it for $750 million.
Gotcha. And
So
the deferred, go ahead.
as far as the depreciable value, there's, other than reporting that and estimating that for the financial reporting itself, the only other reason that we need that figure is potentially for borrowing ability. They have to know how much what we own has depreciated and maybe what we could borrow against as far as bonds or anything like that. Is that correct?
There's quite a bit of uses for those numbers. The rating agencies would look at that. As someone who analyzes financials, what I see and what analysts and investors would see is that we have a very low net asset for governmental funds. And if we would look back on a back schedule, we would see that we're depreciating, our buildings and infrastructure are depreciating faster than what we're investing in. That's what an investor would look at. On the management side, especially your public works and especially utilities, they're looking at that depreciation expense and making sure that they're matching that depreciation expense with their CIP and replacement schedule as part of their rate scheduling.
Oh, that's helpful. Thanks. Thank you.
And still on page 22, as long as we're there, the total deferred outflows of resources of $41 million. What is that again?
So, council member, you have made the comment several times that's just accounting, and in this case, I'm going to agree with you.
Okay.
The deferred outflow, it's part of how we balance, if you will, the balance sheet.
Okay.
You'll see down below, you'll have things like deferred inflows of resources, and it's just a way to match or accrue up revenues and expenses in the same fiscal year.
Okay.
So for instance, the deferred inflow of resources of real estate tax revenue of 21 million.
Yeah.
If you look up above, you'll see a receivable of taxes of 30 million.
Receivable.
It's like the second number down.
These numbers are just really small.
Yeah,
I know.
So and what the accounting people are doing is making sure that we don't go, wow, we have $30 million in receivable taxes. Let's spend it. Because down below, you'll see we defer 20 million of it because we don't have it all yet. It's just a receivable. And so these are almost what you would consider a contra account to make sure we're not overinflating the value of what we own.
Okay.
And it's the same with the deferred outflows. It's making sure we're not overinflating what we owe. And I'm sorry for that to be a technical, nerdy accountant view, but that's...
No, it's just, you know, the responsibility is great on the three of us. And I know not one of us is an accountant. And I want to at least know that we've looked at it. And page 17, can you just explain page 17 to me? Because I gathered from it that of our governmental activities, we're 22 million in the hole. So I'm hoping you can explain it. Page 17.
So page 17, I have a graph.
Yes, expenses and a pie chart.
Okay. Yeah.
Could you just explain the page to me?
Sure. This is Yeah, this breaks down the expenses of the city of $313 million, showing that the breakout percentage by function.
Okay. So the city's total expenses to run it for that year was $313 million. Right? Is that right?
And this, yes.
Okay. So where is the income that we got from the government activities? That's on another page, right? I think.
Actually, it's the page before,
Oh, okay.
page 16.
Okay, so revenue was 105. So that's right. That's what I did. I took the 127 million expense and I subtracted the income we received of 105, and I came up with a negative number of $22 million that I said our expenses exceeded our income. And I know I've got to be doing something wrong, and I want you to tell me what I'm doing wrong.
Okay.
Or maybe it's true.
No. The what you're looking at, you took all expenses, governmental and utility for the expenses, but then you only took governmental revenue. You didn't take the governmental and utility. If you look at the above the graph, it's $331 million for all revenue for both types of funds.
On page 16. Yes, I see it now. Okay. Okay. Thank you. So I should take, so the real numbers are 127 million in expenses and 331 in revenue.
No, I'm sorry. I'm terribly sorry. I didn't hear the 127. I thought you took 313.
No. What I did was I took 127 million expenses, subtracted out what I thought was 105 million in income to come up with a negative $22 million, which would tell me my expenses exceeded my income. And I wondered if that was correct or if I had, made a mistake, which would not surprise me.
Nope. So no, I thought that is the math is correct. The problem with the way this reads, this does not include the in lieu of transfers from utilities into governmental funds. Okay,
so how much was the governmental in lieu of transferred that fiscal year?
20,360,000.
Okay, so now we're
if you look on page 15, it actually shows the numbers for those graphs.
Okay. So
and on
go ahead, please.
Under governmental activities heading for 2019, you'll see the total revenues on page 15.
Okay, go ahead.
You'll see total revenues 105 million.
Yep.
Okay. If you go down to expenses, you see the expenses of 127 million.
Yep.
And then you see these other things. These other things are the in lieu of the transfers in of 20 million. And then the special OPEB change of 72 million.
And that's the health insurance premium savings?
Yes.
Okay. So instead of us having a negative number, we have a positive almost $71 million.
Right. 72 million of it is a special accounting treatment. I would look at it as if we don't include that 72 million, and you would see 125 million versus 127 million dollars in expenses. So if you took the OPEB changes out, the governmental funds lost about $2.5 million. difference between revenues and expenses.
Okay, so we did have a negative. Okay,
Right.
okay. And that was lost on governmental. Okay, okay. Not the utilities. Governmental. And what's it called? Governmental resources? Is that what you keep calling it? Activities.
Governmental activities. Yeah.
Yeah. Okay. Okay.
If you would like, I can show you the first statement that kind of breaks down the differences between those.
Sure.
Okay. That's it's called statement two. And I'm gonna it's basically the first, I'm sorry, the second financial statement you actually see in the actual financial report, and that's page 23.
Okay. I'm sorry. Go ahead.
That's okay. On page 23, you'll see kind of the difference between governmental and business type. So you'll see the expenses for everything. If you look down, our total primary government expense is $313 million. Okay,
Got
and
it.
it's subtotal between governmental is 127 million and business type activities. Now, up at this time, I've not mentioned the event center, but technically, the event center is structured and reported as a business type activities. So you'll see that in there. So the way this report reads, it shows you, hey, this is the expenses for these programs, because that as a government is what we do. We do the programs based on our expenses. The next column says, okay, well, what's the net revenue into that allows us to offset expenses? And then you'll see then some grants, 2 columns for grants. And that last column on the right then says, okay, here's the net expense, as you will, for the governmental side for each of these programs. And the second half of the report underneath says, in order to cover those expenses, here's the taxes we need in order to do that. And that's, again, it kind of breaks down between the governmental type and business type. I'm not sure if that's any more helpful to help kind of break those apart. But that's believe it or not, this was put, and I remember when this happened, this was in 98, 99. The idea was to make these statements easier for people to read. So as you can tell, this is very easy.
Yeah. What's culture and recreation, Brian?
Well, I like to think it's based on the eye of the beholder, but in our case,
it's $9.8 million. So I need a better definition.
That's the park and recreation.
Okay.
Is usually included, and I don't know why they use culture and recreation. It's not us. This is the standard reporting that we have to use.
Okay.
Other communities would have theaters and museums, and they would use the same category together, and that's why it's referred to as culture and recreation. But in our case, that's our parks and rec, tourism, things like that.
Would it also include the event center?
No, the event center is a business type activity, so that's in that next.
Oh, I see. I'm sorry. Okay.
Yeah.
Oh. So tax increment financing, the city spent $9.7 million on TIF. We got $1 million paid back into it, but we're a negative $8.7 million in TIF payments. Is any of that principal, or is that all that interest? You happen to know?
We can look at that later. We can go down that road. Most of it is interest only.
Yeah. Okay.
Down below, this report doesn't break it out, but there are TIF tax revenue that offsets that.
So it's not as bad as it looks. Okay.
And if you'd like, there's a report that I can show you the profit loss, if you will, for each of our TIF districts.
That'd be awesome. I'd like to see that. Okay.
So on page 46, just a question about the financial statement and investments. So this is what the city's investment pool and all the investments that the city has. Some of them long-term, some of them are in cash. But I assume this is pooled from all the governmental side and the business side. Probably not much on the governmental side. It's probably all business side. It's out of this amount of funds, which totals 237 million, that we borrowed the 25 million. Is that correct?
Well, we haven't borrowed anything yet, but yeah, the line of credit would be coming from the 237 million.
Yes. Okay. Is there going to be a problem because some of it is not liquid? I assume the local government investment pool is more liquid than, say, the Federal Home Loan Bank or the U.S. Treasury notes. We'd have to cash in Treasury bonds, Treasury notes. So is that going to be taken from? That's my question. Where is the liquidity in those funds, and where will it be coming from? Or do you know?
No, so it may or may not come from different areas. If you look at the last two lines, deposits and repurchase obligations of 52 million, that's our most liquid. So there's liquidity there. However, it depends on the market. So depending on when we do the drawdown, we would take a look at this, and if we have some notes coming due or that are maturing, that we might use that money. The way that your loan ordinance is written is the cost of issuing debt that we could do if we issued bonds, and then the cost of investments that you're seeing on this list, and it's half of that. So we're splitting the half of it. We're taking what the general fund could borrow in the open market, and we're taking what the investment rates are that these funds could get, and then we're halving it. So the general fund is getting a lower interest loan, and the utilities and the pooled cash is getting a higher investment. So that's kind of the rule of thumb that I've always used with my clients, and it's kind of a good rule of thumb that people use to do these type of transactions. You go out onto the open market. Again, the ordinance spells out. I'm going to a money market rate, basically, our T-bill rate, and then at the same time, I'm going and looking at what the city would get if we issued debt that day, and then I'm just dividing it midpoint. So both sides benefit out of the transaction.
That's fine. Okay.
Sorry to go a little bit more in detail, but I think that was a question that had been asked in a previous meeting. I just wanted to clarify that.
Yeah. And on page 18, there's a sentence, and I just wondered why. We're talking about business type activities, and it says the revenues of the city's business type activities increased 3 million and expenses decreased 5.9 million. That just seemed like a lot of a decrease in our business expenses, almost double what the revenue was. So I wondered if you can maybe expand on that just a little bit so I can conceptually understand what happened.
Yes, let me see if I can get, just so I have it in my head.
Right.
I'm going to get to a statement here. Sorry.
Because it says that, on page 18, like I said, it said the changes in revenues result primarily of an increase in the investment earnings because we're investing the money smarter. But then it just mentions the weather impacted the expenses. And it just seemed like 5.9 million was a big decrease to me. I mean, decrease, sorry. Maybe it's not, but 6 million, to me, that's sort of a big number. And I just wondered why, that's all. If you know, maybe you don't know.
No, the reason I've looked at these financials so many times. I'm looking for a statement that has, or a report that has those side by side. So I'm gonna call a lifeline for Nancy to point me to a statement with those, the 19 and 18 years side by side.
And I would like to mention for the public's information, it is extremely difficult to do this type of meeting on a telephone or on a computer. And I certainly appreciate the staff. They have worked so hard on this, and I do appreciate it. And I wish I were smarter and I didn't have to have all these questions, but I do. So with that being said.
The best one for the side-by-side would be on page 15 for the utilities showing the expenses and the revenues for the 2 years.
Okay, thank you. Oh, you're right.
Okay, 15, got it. Decreased 5.9.
So the expense decrease was power and light, and without again reaching a lifeline, that is probably going to be a capital expenditure. Like we had a capital expenditure last year that we're not seeing this year.
Okay.
I'll invite Nancy to if there's something she'd like to elaborate on that.
Is that Missouri City? Did we pay on Missouri City? Maybe that was it.
I can't really think of anything off the top of my head, but we could definitely go back and take a look at that.
I'd like to know the 6 million. I really would, and I appreciate it, Brian. Thank you, and thank you, Nancy.
No,
I just want to know.
That's fair. Nancy, if you could look that up while I'm explaining more.
Okay.
I'm going to guess you're going to see it in a capital line item somewhere, but I could be wrong with that. Okay.
And then I'm on 58. Does anybody have a question before 58?
I have one on 55.
Go right ahead.
So it's under payment in lieu of taxes. Of course, it gives the three figures from the three enterprise funds, which total a little over $20 million. It's in the past, I thought it was close to 25% of the general fund. I guess maybe that is 25% of the general fund income. But in some of the other documents, it talks about the event center being like an enterprise fund, but we're not obtaining any payment in lieu of taxes, I'm assuming, from the event center. Is that right? And should we be? I guess that's
this one I might pass on to if either Zach might want to answer that. No, we're not receiving in lieu of, and the question of whether we should be, I think it's part of how it was established and the contractual relationship that we might have with out there on the operations.
I don't have a firm answer on that today, so I'd need to do a little bit more research on the history of there. That preceded my time of when I came to the city council member of how that deal was structured. So I can certainly make note of that and get the committee additional historical information on that.
I know originally it was part of that TIF out there, I believe. And so there may be some complications with that TIF. And if there are, that's one thing. But if there's not, then it seems to me that it is another type of enterprise fund, albeit very small compared to the other three. And I would hope down the road that if we start any sort of use of our fiber network that we have, that we maybe lease or develop in some way, that it becomes another enterprise fund that would pay in lieu of taxes. So I know we just have the three listed, and those are the three main ones, but I think down the road we need to be looking at ways the city can generate revenue. And so I don't know. That's something I think that we need to look at. And whether it's the financial people or the legal people, whoever it is, we need to figure out with that TIF agreement with the event center, I guess it's the cable Dahmer. I was trying to think what to call it, the cable Dahmer of the internet, that we need to say, yes, we're going to be expecting a payment in lieu of taxes for any profit. Any profit that is made there, we expect a payment in lieu of taxes, or there's going to be a 9.08% payment in lieu of taxes on ticket prices and things that are sold there. I don't know. I don't know if that's all legal, but I think it's worth looking at.
Yeah, and like I said, I'll get a little more detail, but generally speaking, the contract I know right now is structured in a way that it's no risk to the city, so the losses would be incurred by the management firm. So this year, we know, you think about all the canceled shows, the abrupt end of the Mavericks and Comets season. The management firm Spectra is incurring all of the losses on that, which are six figures at this point. I do know there's a threshold that if they make above a certain amount, then the city collects the revenue above and beyond. But let me get the full detail for the committee on that. That's good information and good suggestions too, council member.
Yeah. Okay, Karen, go ahead. You said 58?
Yeah, I just, 58 is notes to financial statements, which is like, oh my God, it's a whole page as a note. Okay. I noticed that like under infrastructure in the middle of the page, it talks about a production plan, transmission plan, distribution plan, general plan. I assume that's all Blue Valley, right? Is that what that is? Okay, you're not really talking. You think you're talking, Brian, but you're not. Wow.
Yeah, I think I'm unmuted.
Okay. Okay, there you go. I just was, I'm assuming that's Blue Valley.
On the production plan for, yes.
Okay.
This goes back to the question that was asked about the depreciable versus non-depreciable assets.
Mm-hmm.
This gives you the detail that was included in those amounts earlier. What you see, however you see it broke down, you'll see the full value, or the full value, and then you'll see the depreciation underneath it. So this gives you a little bit different look at that.
And then it has other of 2.7 million. I don't know what other would be. Other, it was like, is that Missouri City? Is that Dogwood? Is that Iatan? I don't know what that is.
Okay.
But then if it's not them, I don't know where they are. I'm hunting.
Yeah, I'm gonna have to get back to you on the other. That's
Okay.
Now I will say, I do need to say that the production also includes the I call them peak plants, the smaller generation units.
The 6.
Yes.
Not Dogwood, but the 6 around town. Okay. And then what's construction?
Well, it would also
go ahead.
Now that you did say that, it would also include some Dogwood, our proportion of Dogwood.
And also Iatan. Any? No, Chef
I don't
Scott
know
saying no. Okay.
Yeah, Iatan, I don't believe we own generation.
Oh, okay, okay. Dogwood generation, okay.
We just own a contract, Karen. We don't own, I don't think, part of Iatan. We own a
Okay,
share of Dogwood, but probably the liability is maybe greater than the investment value because it's depreciated significantly.
right.
And so there's going to be a lot of maintenance, and they didn't make that much money in the last year anyway. They didn't make hardly any money, so it was not a good investment. Now it's depreciating, and now we're going to be on the hook for more maintenance and eventually either remediation or replacing units down the road. So,
Well, 12%. We only own 12% of it.
no, but we own 1%, and we're on the
Okay.
hook for part of that.
Okay, okay. And Mr. Kidney, construction in progress, $32 million. And I don't know what that is. What construction in progress for $32 million are we talking about?
So those would be projects that are in process of being constructed. I'm trying to find the 32 million.
It's on page 58, balance June 30, 2019.
Okay. But
And I just didn't realize
yes.
we were building $32 million worth of stuff. So this includes
again,
like the Truman Road, I guess. I don't know.
okay, so right now you're only looking at IPL on that
Okay.
statement. This is only IPL. So you would see transmission lines that are being added or a major improvement of. You might see, I think there's a generation or a substation that might be in that number. Honestly, I don't have the list of their outstanding capital.
Okay. But it's just
projects.
IPL capital projects.
On that particular page, yes, you'll see there's a page for IPL, there's a page for water, and then there's a page for WPC.
Gotcha. Okay. And the IPL numbers include the solar farm, right? Even though we have a contract with MC Power? Okay, okay. Okay. Golly, guys, that's as far as I got. So, John, you've been very quiet. Do you have any questions of poor Mr. Kidney?
I've been asking as we were going through and seeing fit. You guys have been doing really great. I mean, I feel like I'm Clarence Thomas and just let you guys speak, and I'll have my answers. I give it to you. So you guys are doing good.
Scott, anything?
Yes. Page 69. 1, 2, 3, 4. I circled 5 different development bonds and list the interest rates on all of them, obviously. The top one, the very first one for 14 million is 5.3% up to 6%. And I assume that would be one of the first ones we would try to refinance. Is that right?
That's yes, and also I'd like you to consider the fact that those are taxable bonds, so they're going to have a higher interest rate than tax exempt bonds. But yes, yeah, we're I can't say too much publicly until we start the bond issue thing. We don't just to say that we continue to look at all refundings. There's a certain issue when you start saying, well, we're going to refund this particular bond on this particular day. That's getting information out to the market beforehand.
Right.
But just to say, yes, we do this analysis, and believe me, there are a lot of hungry underwriters and financial advisors that make money off of refunding them. So I'm never short of refunding analysis that people send me randomly on each of these bonds. So this is constantly looked at.
Well, the top one that for 14 million is a taxable bond? I thought all of them were tax sheltered or tax-free municipal bond. They're not.
No, I believe, Zach, you might have to, or I'm sorry, Mr. City Manager, you might have to assist me on the makeup of some of these. I believe there are some taxable tells to a part of these.
The other one I wanted to ask about is the one that 1, 2, 3, it's the fifth one from the bottom for 47 million. It's a series of bonds. It says it's dated 2015. Is this one of the ones that we already refinanced? That was my question on that. That's the lion's share. That's more than all the others that we have here combined. 47 million. Is that one we just recently refinanced, supposedly at a lower interest? It says 3 to 5%.
Yeah.
And it says through 2045. So I'm assuming it was refinanced because it's such a long term.
We were looking
It
at
looked
having.
like the one that was refinanced in 2015.
It says 2015.
So keep in mind, sometimes the label may be a little bit off of what the actual year of issue is, or when it closed. But you're correct. I know we've talked about the 2016 issue, but that one is the large one that we've talked about, the $45 million one.
Okay.
And that was the one we were looking at facing a payment of like 15 million or 17 million. So we refinanced it. That's the one, right?
It had a balloon, I believe.
The balloon. That's what I meant.
Yeah, if I understand it, that refunding was put in place to give relief to the general fund that was making some of those payments, and then was refunded out with the idea that it will be refunded again later.
Yeah. I remember that. Anything else, Scott?
Yes. Page 72 has to do with the revenue bonds. And you know, those bonds were just from the TIFs, I believe. Missouri Development Finance Board bonds. So this one revenue bonds from Power and Light, Water, and Sewer. So, I mean, the two biggies are Sewer and Power and Light. I've had questions even just this week about why their sewer charges are so high, and I've told them. I said, well, you know, they bonded and sold funds, and we're making payments on those bonds. And until those are paid off, there's going to be higher sewer charges on everybody. It's not totally linked to the water, but these revenue bonds are significant. The Power and Light bonds total as much, if not more, than a year's income. The Power and Light, and I would say the sewer fund as well. So I just want to call attention to that. I mean, the Event Center Fund also has $87 million in bonds against it. So we're looking at a lot in business type bonds that have been sold by the city. I didn't realize there were that much borrowed against the three enterprise funds. But I think down the road, Mr. City Manager, it would be good for the council at some point to be given some information about how much indebtedness the city has with both of these funds, both the finance board loans, which included all the TIF loans like at Bass Pro, and then all these revenue bonds, because that's, you know, we're talking what, 134 million and 359 million. So probably $500 million in bond payment. Yeah.
And Councilmember, that's a great point. I really appreciate you highlighting that. Two things I just want to lay on for the committee there. One is the budget overview that we gave you last Friday when I was talking about building the structural long-term balance, and one of those driving factors being economic incentive debt. You're seeing that and touching on that here today. Also, I know the council's had questions in concert with the Public Utility Advisory Board about what is an appropriate amount of cash on hand or surplus funds. Part of that conversation too there is having adequate debt service reserves for these massive liabilities that we have there with those utilities as well. So these are important conversations and ones that we need to have in the short and intermediate term as well. So thank you for highlighting that.
Well, and that's why we need those reserve funds, both for the general fund, but also for all the enterprise funds. And I don't want to downplay that, because we talked about having at least 60 or 90 days in IPL. Well, we need the same thing in sewer, obviously, and
Exactly.
department as well. One last question, page 73. It says down toward the bottom, it lists the different accounts, and it lists the purchase of the dogwood plant. And I guess I did not realize that we still owe money on the purchase of the dogwood shares. Of the 12% that we bought, we still owe over $61,500. And it must be at an interest rate that it doesn't pay to pay it off. I didn't realize we were still paying on our ownership share on dogwood. At the same time, we are still trying to maintenance and running of dogwood, which that just adds to the fact that it probably has been a loser of a proposition that we're still paying on it. So I don't think anybody on the council, except just now, has realized we still owe money on the buying of our share, 12% of dogwood. And it seems like that was water under the bridge years ago, and nobody has really even looked at it. And I didn't even know that until I saw that figure. So.
Councilmember, I do want to point out the table that you were referring to is restricted cash.
Okay.
For outstanding bonds.
So it's bonds that we owe on, but we use bond money to pay for it. What you're saying?
Yeah, the table on the previous page shows the amount outstanding for the different bonds. This particular table talks about in that the purchase of the dogwood plant, there's $61,000 held in cash as a reserve for that bond, and that's what that number is.
Okay.
But yes, going back to your point that yes, there is still outstanding debt for the purchase of dogwood. I just wanted you. I didn't want you to think it was only 61,000. It is more than 61,000.
Okay.
What is it? Do you happen to know what it is?
I don't know if I have it offhand. I know it's part of, I believe, one of the 2012 debt issues. And if you look above, you'll see.
I'm 70.
It was either part of the $53 million issue or the $42 million issue.
Okay, what page, Brian? I'm flipping too many pages back and forth.
Yeah.
On the revenue bond?
Yes, on page 72.
72, okay. Okay. One of these is dogwoods. We're just not sure which one.
A portion of one of those is dogwood.
Yeah, I think it's the
Nancy?
2012A.
Okay.
And then on page 74, I was going to say there's another chart that kind of will show you the principal and interest that remains on the dogwood one for the 2012A.
Where is it, Nancy? I'm looking at 74.
On page 74, the top chart or ground table, and then the second one down is the electric system
there it
for
is.
dogwood, and it's 87 million.
There it
That's
is right there.
principal and interest together.
Okay.
Yeah. So, Nancy, thank you. Again, I wanted to make sure you realize it was 87 million, not the something thousand.
Are we looking at just refunding and refinancing IPL bonds, or are we looking at the sewers too? Because that sewer bill is high. I mean, I have a $12 charge on it every month, so. I'm just
Yeah,
curious.
so again, and I'm looking forward to, just because, as you can tell, I'm a nerd, to go more in depth on the debt part of things. I think that question was just recently asked about us to do a presentation just on that. But I will say, if you look at the sewer bonds, these are all recent. 2012, 13, and 14 were the three sewer bonds.
Okay,
Typically, our bonds have a 10-year call provision, 8 to 10 years, which means we can't refund those bonds until 10 years out.
right,
And
right.
so at the earliest, that 2012, we're probably looking at mid 2021, which is next year. So we'll probably be looking at that closer in probably March or April of 2021 would be when we start really taking a close look at preparing that for a refunding.
Okay. And, okay, I do have one last thing, and Scott, do you have something else?
No, the rest of mine have been answered. So that's the last one I had. So
I just have a page 90. Can you explain page 90? And this is the general fund, the all important general fund. And I just want to understand this page. And I don't want to go forward without understanding it. So this page it starts with our revenues. It says original amounts and then final amounts. Final meaning that's what, in fact, the numbers actually were. We, in fact, received taxes of $34,715,000. Is that what final means?
So on the budget columns, the original
Yes.
means what was adopted in June of 2018.
Adopted June of 18. Okay.
Right. Final would be if there's been any reappropriations or budget amendments brought to council over the fiscal year. You might remember there was one, I believe a month ago. We received some grant funds. We received some other type funds.
Right.
We brought to the council, it's an appropriation ordinance where we say
Okay.
we brought more money in. We want to bring that in and adjust our revenues up, our budget up for revenues, and budget expenditures up to cover that. So when you're doing those appropriation ordinances, that's what you're doing. You're changing those columns.
And what's actual amounts, parenthetical, budget basis, close parenthetical? What is that column?
That is our actual revenue and expenditures based on a budget basis type of accounting.
What does that mean? What is a budget basis type of accounting?
Oh,
you can't
Is
figure
that
it
real
out.
numbers, or is it one of those, oh, that's an accounting thing?
actually, so for governmental and for governing bodies, I would say that the budget basis is more of your real dollars,
Real dollars,
and not accounting.
okay.
There's a little disagreement in the industry, I guess, if you will. We budget our numbers on what we call a modified cash method. And it basically says we don't count revenues until they're received and measurable. We know we're going to get it. And we count our expenditures as when we enter into a contract to spend them, which is different than all the reports you're seeing up to this point, which recorded revenue quicker. Like, okay, we've got a receivable. we build somebody, we know we're going to get that revenue, and so we're going to count that as revenue. And then
I wish I
we
could
don't-
operate my business that way. Don't you, Scott?
Yeah. Well, actually, that is how businesses do account for. So most of the reports in here are what you would consider business type accounting.
Okay.
This report is showing appropriation based accounting. This is,
Got it.
does the city have the resources available to do the expenses that we're saying that we have? And so it's a more conservative method. That's what budget basis means. And there is a semester class that I've done before that I could go through and explain, but it does, it's pretty nerdy stuff, but basically this is what you have resources to do. And so that's why we do budget based this way.
There's a lot of negatives over there with the variance on the final budget.
Mm-hmm. So above the in the revenue side, negatives. Let's see. Yeah, on both on the revenue and expenditure side, negatives wouldn't necessarily mean a good thing.
No.
However, I will point out in governmental accounting, if you overspent for a program, sometimes it's because the program needed to be done. And I would say like fire and police overtime, that those are services that the city's providing that needs to be provided. And I think I would say Kristen and Zach both are working very hard on this budget year to make sure that those are within the budget numbers. But just to say we spent that number, I wouldn't necessarily say it's a negative thing that we provided those services.
Okay, I want to get into expenditures. And I'm looking at page 90 in the middle of the page. And I see that the city, these numbers are so tiny. My goodness. So city council, we had amendments to, no, we didn't. Okay, the city clerk had amendments. So the final numbers for the city clerk were $302,000, and the actual amount, real dollars, was $217,000. So there was an $84,000 variance. Do we know why? Did we hire somebody or
what
what?
you're looking at? So what you're looking at there is that the city clerk's office spent less than what they originally planned for, and so I don't know. Becky, obviously, she wasn't the clerk at that time. However, I believe you probably budget for the if there happens to be an occasion for an election it's budgeted for. It didn't happen, and so therefore you wouldn't spend that.
And that would be under the city clerk criteria?
I believe so. Becky?
Okay.
Yeah, elections are put into the city clerk's budget. So if there is a big variance like that, if I made an educated guess without looking at it, it would probably be due to an election, because otherwise our budget isn't that large.
Okay. And then the next one is city manager. So the city manager's office spent $289,000 less. Is that what I'm reading? Or they spent $289,000 more than what was budgeted?
This would be less.
Okay. Law department, we spent $55,000 more.
Look, yes.
The original budget was $845,000. We amended it to add another $40,000, but then we spent $900,000. We spent $100,000 more than we originally budgeted, though. So how much did our law department cost that year? What number do I need to look at? Is it final or is it actual?
Yes, it's actual, 944,000.
Do you have anything that could tell me what the law department budget was or expenditures was the year before? Do we still do that on our accounting? We can go back 3 years. We used to be able to do that.
Yeah, we have that. I just don't have that access.
Okay. Okay. I would like to see
right.
that for all. I would like to see the last 3 years, especially under the general fund. I'd like to see that. Please.
Aaron, I suspect that part of that may have been a payout from Dale's retirement too.
I don't know. Might be. I'd like to know.
Details, but
I mean, if you wouldn't mind, yes, that was payout, and then there were multiple payouts in that fiscal year, and the same for finance department. There were multiple. There was a director payout, and then other ones. Actually, I believe a couple director payouts.
And again, I would just like to know. They look like, gee whiz, what did we do? And I don't have an answer to that, so I would like to know. And I know, especially, like, I'm a lawyer, so of course I know I pay most attention, of course, to the law department. And I know it was a cost-saving measure. We made changes, and I'm questioning if we saved anything. Was that a good decision or not? I don't know, and I'd like to be able to have the facts to make that decision. That's all.
Councilwoman, this is the city manager, Zach Walker. The other thing I might suggest that we put on for, and probably even do this for each of the departments, is kind of what the big issues were. So, you know, like you mentioned the city manager's office, you know, why did that have so much savings, or why did the cost? And the law department thing too, the other asterisk I might put there is that can largely be also driven. I know we were mentioning the payouts because of the big changes we made there from a personnel standpoint, but also remember, this is where our outside legal counsel budget is housed. So if we had, you know, some litigation with a firm or a personnel matter or a labor issue, for example, that will be, you know, driven by that year to year too. So I think it'd be helpful to kind of, you know, maybe not get so granular that it's overwhelming for the committee,
Exactly.
But certainly just to give you a high level flavor of, hey, what happened in the last year that influenced that number?
Because I want to make sure that we, you know, we made that decision, we did that decision. Well, I want to, now that we have the benefit of hindsight and numbers, was it the right decision? That's the information I'd like to have available in order for me to make that decision. It might have been the best thing in the world that we did. I don't know.
Indeed. Yep. We'll get that. We'll start working on that.
Can poor Mr. Kidney go home, or do we have yet more questions for him?
I'm actually here at home.
Oh, okay. Then let's move on to number 4, absent objection. Then item 4 is discussion on future monthly financial and operating reports. I added this because I remember getting monthly operating and financial reports, and I want to resume them. And I want to resume them with monthly audit and finance meetings so we can all look at them, at least until we understand what they say. Once we understand what they say, maybe we don't need to operate as an entity reviewing them, but I just thought it'd be a good idea if they would be reviewed as an entity. So that's my suggestion to this committee, that we have monthly meetings and we have monthly reviews of the financial and operating reports.
Chairwoman,
Yes, sir.
is that during for the COVID-19 situation we're going through, or you just suggesting we do that in perpetuity, or just
In
during this
perpetuity.
time of crisis?
No, in perpetuity. I mean, and it could be after 6 months of doing it, we're very comfortable understanding it. We don't have questions anymore. We don't need to do it. I don't know. But I don't think, you've seen me for 5 hours asking financial questions, John. And I just think it would be beneficial. And we will be publicizing the meeting. So if any citizens ask questions, they can tune in.
Sure. I'm okay with that.
sure.
Scott, I know you're only here for a month or two, but are you okay with that?
Okay with that. I'm okay with it. Yeah.
Mr. Kidney, can you fit us in once a month?
Yes, we do prepare. We prepare what, and I'm glad we brought this up earlier. We prepare a budget basis monthly report, so it will match. It will have that original budget, amended budget, the actual budget basis account, and then the variances. In fact, I'm looking at March's right here. So we do have that. I will say during the transition that we're having with some of the munis, the goal for my department or for my staff is to have those posted online on the 15th of the month following. So I would ask that if it's available, if we would be able to have those meetings at or after the 15th of the month, if at all possible. And we certainly see ourselves moving that up to the 10th of the month once we get beyond some of this transition though.
So maybe the third Friday of the month would be, is Fridays good for you? Or I would think Mondays are awful, but maybe Friday is best or some other day is best.
Council member, every day is a dream working here. So
Okay.
Fridays are just fine.
Mr. Perkins, Dr. Roberson, Fridays are best for me, to be very frank with you.
That works for me.
Are mornings best?
Yes.
Okay. So we'll go ahead and Miss Becky will do her magic and we'll set up meetings for Friday mornings. Third Friday of the month. Okay, the next item was, excuse me. Does anybody want to add anything to these monthly standing meetings? That was my question too.
No, I don't think so
Okay.
yet.
Okay. Next, a discussion on the Munis updates. I just about fell off my chair when I heard it will take a year to fully implement Munis. I don't think we can wait a year. And I know money's tight and I know staff is short, but June of 2021, between the significant deficiencies and the material deficiency, I'm very, very anxious. So I would really like to move up Munis. And I don't know who to talk to and I don't know how to get that done because it's not like I have a magic wand and I could just do it. So I wanted to discuss it.
Is there, go ahead, Mr. City Manager.
Oh, yeah, Councilman, if I could just throw a suggestion out there and then the committee discuss it. I know, as you mentioned, money is certainly a struggle for us right now, as it is for a lot of municipalities. But I think you've certainly recognized the short staffing that we have across the organization, particularly in finance and administration. With the committee's support, what I might suggest is that within no more than a week, a memo be transmitted to the committee from Mr. Kidney and myself, making a request to utilize funding to bring in some contractual help. And I think we need to find out exactly what that might cost. But I mean, I think that could be staff supported, but I think we need to get some contractor assistance in to help us get this across the finish line in a timely fashion. Certainly agree with you that this cannot linger, but I think in order to do that, we need to recognize our own limitations and the bandwidth we have, and additional assistance would probably be warranted.
Can I ask a question? Is this primarily a software issue or is this an issue of transferring data from the old system problem? So which problem is it? Is it a problem of migrating data or is it a problem of the software?
So I don't believe the migration is the issue here. And I do want to be a little careful how I don't want to say anything negative that was done on the installation or the preparation that was before. A lot of the staff who's here now was here. When we say having full implementation, I would first like, and I think, and I'll make sure the memo has this, do a little bit more of assessment of, do we really need the full implementation of some of these? And the example I'll give you is our procurement. Our procurement was set up when there were 4 procurement people in that department. Currently there's 1. I think we can do without 4, but I think we need more than 1. However, when it was set up, there was a lot of, well, we bought the software, let's implement everything. I believe without really taking a close look at the business reason and analysis, does it make sense to buy this and implement it? We have a full-blown procurement system, which includes things like, did the receiving department receive the goods? We don't have a receiving department, but yet we implemented everything. So which means that we then have an accountant go in and just basically say, yep, we received it. So some of these softwares, and that's just a little example, are set up for a community much bigger than 100 and some thousand or for 1,100 employees. And so when we say fully to make it as efficient as it could. So I haven't had a really good chance to go back and say, yes, I realize we bought this module. This module costs some $10,000 a year for maintenance on this. But yet, if we do have a spreadsheet over here that doesn't cost anything, and if I could have work with the auditors to say, your procedures are working great, so you don't need to implement that full portion. And if it was just like a checkbook accounting software, it would be like very easy, but it is a massive amount. Another one is travel and training. We purchased that. In the meantime, we wanted to make sure we got something out to the public and to the governing body quickly. So we wrote an in-house program that is amazing, and you can access those reports. That's not costing us anything right now. So I don't want to implement.
Okay, Brian Kidney, I'm sorry, I have to interrupt you. City Council made a policy decision to buy the software. I mean, in your memo with Mr. Walker that you're going to present in a week or so, if you want to make a suggestion on not implementing what the council already voted to implement, I really would rather you do it in that memo and not just having a conversation here with Audit and Finance. That was a big policy decision. We spent a lot of money on it. And I certainly am. I am not comfortable even considering not fulfilling what the city council voted to do. Okay, I mean, and I know I interrupted you, and I apologize, but the reason we bought it is because we had already had the systems that worked in-house, and we don't need to spend money to make sure that they're going to last forever. We nicely call them legacy systems. And between retirement and equipment breakdown, it became impossible for us to operate the city using those old programs. I don't want to leave another council in the future and more citizens in our boat. And that's why we voted to do the Munis system. So I'll be quiet now. Okay, I'm personally, I like Mr. Walker's idea of a memo. I mean, it will give you guys an opportunity to sit down and think, and for Brian to go ahead and say, you know, we thought it was a good idea to implement this one thing, and maybe we don't want to do that. But if we have a contract, I think we're looking at paying $400,000 to continue updating Munis so that it doesn't become obsolete. I need to know if we're going to be wasting money. Okay. So could you make that part of the memo?
Absolutely. Yep.
Anything else on this, guys? Okay, the next one is a discussion on Audit and Finance Committee CAFR memo. And I know that I probably caused a major heart attack with some people. But I was, my attention was given, how do I say this? Last Friday, our 3.5-hour meeting, and now today with another 2-hour meeting is 5.5 hours. And we have not wasted time. Everything we have talked about has been very important. I am afraid, though, that we should condense it in order to make a report to the rest of the city council and perhaps even to the citizens regarding our, especially the single auditor's report. We had 1 material deficiency and 3 significant deficiencies. I think they're serious. I don't want people to think that we just read the report and put it on a shelf to gather dust. I want to bring it to the attention of the full council and work towards making sure we don't ever see these problems surface again. I am not comfortable, however, doing that memo by myself. I don't know that that's appropriate. And so I was hopeful that perhaps we could discuss this as a concept. If it's a crappy idea, just tell me it's a crappy idea. I mean, I can certainly do a memo to the rest of my council saying these are my issues, but I think this is important enough. We've spent 5.5 hours on this. I think we should do it as a committee. What do you think?
Well, I'll weigh in, at least to begin with. I think it'd be good to include the last couple pages from the auditor's report with the deficiencies and the plan of action to correct those deficiencies so that the council sees that we discussed those, and so they can see that there were some problems and that those problems are being addressed, and that, you know, some of the problems occurred because of the timing.
Right.
As far as the CAFA report, if it would be possible to simply give an overview and maybe one or two page overview and maybe 1 or 2 pages of some of the major questions that can be a future focus of a study session. That I think that would be helpful for the council, and just tell them that we went through the entire CAFA report and that we did have a number of questions, and those questions have been answered at least to the satisfaction of the Audit and Finance Committee. But those questions that we asked, these were some of the significant questions and answers to those. I think that's probably hitting the highlights, and that's really all the council, I think, is going to want. I can't imagine any of them asking any other significant questions. So
I would go along with what the doctor was saying, and if we want to discuss the deficiencies, I think they were spelled out quite well in the report there. I mean, we can, I don't want to say cut and paste, but that would be an easy cut and paste.
And I hate to put more responsibility on the staff in the middle of doing the budget. I mean, and that was the reason I've actually started writing this memo, and then I thought that was very presumptuous of me. And I spoke with Mr. Norris yesterday, and he and I talked about perhaps, asking the staff if they have time to start it, or I can send what I have, and Mr. Norris or Mr. Kidney could make these high points and then bring it back to us, and we can distribute it quickly. I don't know. Mr. Norris, did I put you to sleep, or?
Well, if I could jump in there, Councilwoman, I mean, that is definitely your privy. I mean, to start that and write what you think, and perhaps staff can go through and see what, and disseminate from there.
I just didn't want to overstep my bounds. That's all.
No, you got wide berth here, I believe, with your chairwomanship. So I think you'd be appropriate with that.
Mr. Walker, are you okay with that? It's your staff that I'm.
No, I think that's, and I don't want to make light of it. There's a lot of important work, but after Monday night, I think I always say we rest our case on budget, and it's really up to the council to start deliberating that at that point. So I think we'll have a little bit more capacity there to help you achieve your objective there with this memo to council.
Okay, then with your permission, Mr. City Manager, I will work with Mr. Norris and Mr. Kidney to maybe start that memo. I would pass it, of course, to the committee members for your final approval. Is that okay?
That's great on my end.
Okay. Finally, Mr. Toma Perry, did you fall asleep? Can you tell us anything about the IPL audit?
I'm still here. I apologize if you hear my wife in the background. She's working at home as well. I'm in the middle of finalizing the draft reports. It's going to get piecemealed out to the department beginning this week, and we'll follow the ordinance requirements where department has 7 days to review and comment. Manager has 7 days to review and comment. Law department has 7 days to review and comment. So we'll try to get those in motion to get those to you a week ahead, where you've got a week to review and comment. So if my math is right, you're looking to meet again on June 19th. So the goal is to have it ready on the 19th.
Perfect.
Have it ready to give to you on the 12th.
To us on
So
12.
you've got a week with it.
Okay. And our next meeting, I guess, is the 19th, is Audit and Finance?
If you're going with that third Friday of the month, that would be the 19th.
Okay. Wonderful. That's awesome. Thank you. So shall we go ahead and make our next meeting June 12 at 10 in the morning? Anybody have a calendar, Andy?
June 12th? Is that what you said?
Yes. Yeah. Well, no, I'm sorry, June 19. I apologize. The Audit and Finance third Friday is June 19.
I will not be on the council then, Councilmember DeLucy.
You are breaking my heart. Okay, when is your last day, Dr. Roberson?
Well, I think it's the 15th if I'm looking at the calendar right.
Okay. Mr. Toma Perry, is there any way you can get it to the council before so that we can have it to look at and to vote on it on the 12th?
I would have to ask for the reviews to be done by the department and manager a little bit quicker. Ordinance does say they have 7 days.
It doesn't say anything about how long we have to have it though, right?
Let me look at it real quick.
Because I'm thinking if you gave us the draft maybe the Friday before, like June 5, and we would know the departments are still looking at it, but their 7 days ends before the 12th, we can vote on it on the 12th.
If maybe I could ask city manager to have the city councilor reviewing it at the same time, that it's in the manager's hands, that would cut off a week, and I'd be able then to get it to you, say, by the end of, what is today?
The 6th.
Today's May 6, yeah.
I could make that work. I could get it in your hands by the 5th, and we could meet on the 12th.
Mr. City Manager, what do you think?
Yeah, I think really the primary purpose of the city attorney reviewing it is not necessarily for content, but more, does it need or any aspect of it require an executive session, or whether it be matters of personnel or something like that. And so that could be done very quickly by the city attorney. In our office, we'd be looking at a little bit more from how do we feel about it? What are the things we need to do differently, et cetera, et cetera. So I think that concurrent review that Mark is suggesting makes a lot of sense and would shave off several days in the process and help it get to the committee sooner.
And since we're given the current management, I'm sorry, Councilwoman.
No, go right
current
ahead.
management structure, giving it to the department is really giving it to the manager's office at the same time with Adam. So if we look at those, it's a couple of weeks, it's built in there. And that's why I think if we look at getting all of that review done, and the counselor could look at it before then, I'm comfortable getting everything done by the 5th. getting it to the committee on the 5th, by the 5th.
Okay, so can we have an audit and finance committee meeting on the 12th at 10 in the morning, June 12th?
Yes.
Okay, Miss Becky, would you put that out there? June 12th is our next committee meeting of audit and finance. And on the agenda will be the IPL audit. I don't know that poor Mr. Kidney will have an opportunity to get the financial and operating. Maybe he will. If he has a chance to get it done by the 12th, I'd love to see the first report there. And then we'd also have that memo from Mr. Walker and Mr. Kidney. Okay. Anything else? Not that I don't appreciate everybody, but this is like 5 hours. Gosh.
Well, I think they need the go-to meeting at 4 anyway, so I think we're
Oh, that's
about.
right. We're done. Anything else, anybody?
I'm good, thank you.
Okay, I call this meeting over at 3:52. Thank you very, very much, everybody.
Thank you, gang.
Thank you.